We're here with Duncan Littlejohn from Paul Capital. Thank you for joining us, Duncan. What is it you'll be speaking about here at Capital Creation?
We were speaking about my panel was on secondary markets, the perspective for secondary investments in Latin America and the outlook therein.
A lot's been made of the emerging markets. Exactly how much are they going to be worth in, say, 2050? What contribution will they have to overall growth in the world?
Well, emerging markets today account for roughly 50% of global GDP. And what's interesting is that they now account for about 15% of global private equity fundraising. And that's up from 3% 10 years ago. So they're occupying an increasing role in the private equity allocations of investors for a series of reasons. The main one being, of course, that they do represent a bigger chunk of world GDP than is reflected in most investors' allocations. And the second, of course, is that emerging markets are growing at about close to 3 times the rate that developed markets are growing. So therefore, a lot of attention, a lot of investors that are considering themselves underallocated.
Are there any objections that general partners say have to investing in growth economies, or is it universally accepted that it's a good opportunity?
No.
What are the points of debate?
People are dipping their toes into it. The points that cause them to reflect a little bit as to whether they want to have to do with the regulatory and general investment environment in these places. You tend to have much less deep capital markets, so therefore more difficulty exiting. You tend to have shallower gene pools in terms of GPs. These private equity industries have probably they're 15 years old as opposed to 30, 40 years old in the US. So there is more risk. You have less experienced people driving the bus. And so the manager selection process is very important. And that all, of course, in addition to the macroeconomic and political risk that has to be taken into consideration as well.
You mentioned you're based in Sao Paulo. Can you tell us a little bit about the investment environment in Brazil at the moment, for example?
Yeah, Brazil's been the beneficiary of a lot of investor interest over the last 5 years. Basically, the story there is the expanding middle class. That's similar to the thesis for the other BRIC countries. There's been, I think, in the last decade, something like 35 million Brazilians that were marginal consumers became fully middle class. So that's an important piece of the investment thesis. And going forward, Brazil and Latin America has got very positive demographics, which contrasts with places like China and Russia, where the population is not growing.
What do you see as being the main challenges facing the industry over the next 12 months?
Well, I think in Brazil particularly, you've seen this year it's been hit by the European bug, so it's grown hardly anything in the first semester, and probably will have very modest growth in the next semester, and that coincides with the fact that last year it had a record fundraising year. So you have a lot of money. Everybody's dressed up and ready to go to the party, but when it comes to the moment of pulling the trigger on deals, few deals are getting done right now.
Duncan, thank you very much indeed.
Great.